Yeah.
Okay. So same rules apply as I told you for London session. Okay, first of all, no London session for this one today and 23rd. So when does the London session open? Your time? 3?
Yeah. 15.
Market. Okay. Mark 15 here. And then here 3. Right?
Yeah.
Okay. So the highest point between these two. Okay. So let me write down this overnight session start. This one, London open. Okay. The highest point here, mark it down. And one more thing, whatever you need to check, right? For example, the swing point here. What swing point you check, right? So you can just like, okay, the tip is, for example, the London open at 13, right? So you need to check the last major swing point at or before 12, before like 1 hour before, which is 14. Okay. So just check the major swing point from here, because this is the time when the Asian market close. Understand?
Okay.
Okay, so just check from here 1 hour before London open. Check the last major swing point, which is this one. Okay, this is first step which you need to identify, which you need to understand. So you will see the here. Okay, this is 15-minute time frame. Let's extend it. Extend it all the way up here. Here. Okay. All right. So this is so what do you see here? I mean, between this one is what? Overnight high. Okay. This one is overnight low, right? You finished it. And now you have to check the bias, first of all, before overnight start, how the price is moving here. Okay, just remove this one now. Now we have London open, we have before overnight session start. How the price moved into the overnight session start. Can you tell me? Just look from back. If I look from the back here, what do I see? I see this kind of market, right?
Yeah.
What does this market tell me? Okay, I see, first of all, what things I need to notice. I need to notice the structure of the market, how the market, what is a market like this? Okay, so what I see here from my rough observation is this, that this is a range. Am I right?
Okay.
Yeah,
Yeah.
right. This is a range, right? Okay, this range. Okay, when we see this is a range. Okay, now how the price is entering with this range, within this range, what's happening? What do you see? Now it's the second thing. Once you identify the range, you just see how the range is forming here. Just one straight push up, and then the price ranged here. So this is the range start, right? The first high of the range, the second high of the range here. So what do you see here? The first high of the range. What do you see here? Additionally, huge volume, right? Sudden acceleration to the upside. So what this should be, and then the price retraces back. So what does this tell you? This should be what? Buying climax, right? Yeah, just from the volume here, sudden acceleration west. There is no, I mean, we cannot draw the channel here, but it's not necessary that you have to draw the channel every time just to identify the buying climax. As I told you, the buying climax can occur when you see a huge climatic move up and then reaction to the downside and then huge volume here, right? And then sudden acceleration as well. That's also a buying climax. All right, so we have a buying climax here, and then we have what? We have a automatic reaction here, right? Naturally, this should be what? Can you tell me? This should secondary test plus UT right?
Yeah. Correct.
Okay, when the price broke through it, okay, it's just like a normal reaction test and the price reverse again. Again, what we saw here, again, secondary test, lower high, okay. All right, from second test lower high, the price breaks down and you can see there's a huge surge in volume here as well on the breaking down, okay. See, huge surge in volume here. The volume also increasing and this moves coming down. So this should be confirmed as what? Falling through ice. Why? Because the structure, this should be falling through ice, right? And then the price came back, tested this. What do you see here? How the price is testing? The price goes up, the spread is decreasing, but volume is increasing. Effort was no result here, right? So this should be what? Rally back to ice. Any confusion here?
No.
No?
No.
Okay. All right. And then from this structure, what does this structure show you? What is this? Distribution, right? Okay. If this is a distribution here, and this structure, this is also a range between London high and London low. What do we see that the liquidity is very low here, right? Okay. What do we see? The price started ranging here, very tight price, right? Very tight price, right? After this, because if this is FTI, then this should be what? After FTI, RBI, this should be what? Redistribution. Am I right? Any confusion here? This should be redistribution. Hello?
Can you explain again?
I'm saying once this is FTI falling through ice, we have a distribution pattern. The price is broken down the channel, and then the price is entering into this range, into this overnight high and overnight low range. Then this range should be a redistribution because after FTI, there's always a redistribution, right?
Yeah.
Okay, so this is so obviously clearly the bias is what? Before London Open.
Bearish.
You should keep in mind, it's very simple here. Where is bearish? Why? Redistribution between overnight high and overnight low. Okay. Simple. Okay. And now what do we have here? Now just after we see a range here, and then you see a tightening of the range here, the price make another range here, a smaller range. Okay, within this range, what do we see here? UT, am I right? And after UT, the price breaks down, right?
Yeah.
Okay, because this becomes the range here, right? This becomes the range here. The price enters the overnight low, and you can see when the price is moving, when you are here, you can easily identify this as a range. You can draw a line from support, resistance, and then you can see it's a UT here. You can see increase in volume. Okay, all right, everything goes well here. If this is UT here, okay, then and the price breaks down here, okay, a significant increase in volume. You can see increase in spread as well. So this would be again FTI. This is minor FTI, but it's still FTI, right? So obviously the bias is very clear. The bias is bearish throughout, right? And then what we see here, the price enters into another range before the price can, like, okay, the price just retraces back. And if you just extend this line here, the price came back, tested this region short of, okay, this is RBI, and then the price breaks down. Am I right? This whole structure. So this complete structure is redistribution, right? On a 15-minute time frame. So that should be FTI. So at London Open, the price breaks down, FTI, 5-minute chart. Okay. This whole move is FTI, falling through ice, increasing spread. Okay. And this because this is redistribution structure. All right. Now this is redistribution structure here. So if this is a spread here, right, then the point is where would you take a trade? Okay, so let's go to the 3-minute time frame. Okay. And here we have observed at 12, the price breakdown. The price breaks down here, FTI. All right. So what you do here normally, I would draw the range. Okay, from here to here, because after FTI, possibly there is always what redistribution structure, right? Okay.
Okay.
All right. So this is
Just one question.
sorry.
Is it a distribution when like there is a buying climax?
You mean buying climax? This one?
Yeah,
Yes, this is
yeah.
distribution.
Distribution because there's a buying climax, is it?
Yeah, buying climax, and then we have ATR, we have sorry, AR, security tax, because of this all complete, because of this whole move to the upside. You see how the move is down, very slow moves, and then the price suddenly rise up in just one shot here, and a huge increase in volume. Can you see? So this should be buying climax. Okay.
Yeah. Okay.
All right. So this is when the price breaks down. Okay. When the price breaks down here, FTI, okay, FTI, then this goes into a redistribution process. Now, process is we cannot take our trade here, right? We need either a test on this part, or we need a breakdown of this one, or maybe like a reaccumulation pattern. Okay. Oh, sorry, what to say? We can have this build down, or we can have what? A volatility contraction pattern or upthrust, something like that, right? So what do we notice here? The price went down and then the price just didn't come up. Price made a first high here. The first local high, right? All right. And then the price came down, tested this region here. Okay. All of these bars are of the same length here. So nothing special about it. Okay. So the price breaks down here. Okay. Huge volume. All right. Huge volume here. And then what do we see? The price is breaking through this redistribution range, right? Now, my point is, where would you take your entry? This is the London Open. This is redistribution range.
After it broke through the FTI, then after that, once it rallied back.
Yeah. This one, right? Yeah, this one is a ideal point to take an entry here. So if you take this entry here and place a stop loss right above this last high, okay, and then you just go for 2 hour. Yes, this is all right. Okay, it's all right. Okay, and then when you extend it, you get a second opportunity at London at this point as well. See, the price came back exactly at this point, tested this region, and then went down, right? A second opportunity here. And third opportunity was here, right? This is effort versus no result part, right? This one, right over here, after FTI, first and second, right? This bar, correct? Hello?
Yeah.
Okay. First opportunity, second opportunity, stop loss should be placed on the last high. Remember that. Okay. And then what else? That's it. Now, the thing is, the point is you have to wait all the way down here until almost 40 minutes after the London Open to get the first entry. So what would you do in such situation? Would you wait?
Yeah, I think it's better to wait.
Yeah. But you can always have 1 minute chart separately opened. Okay. 1 minute chart separately opened. Let's see if you can get an opportunity over there. I'm not saying you have to take it, but let's see if you can get an opportunity right at the London Open candle. Okay. A huge bar here. Okay. And then what do you see? Okay, this is the London Open bar. Okay, no opportunity here, just one straight shot here. The price came back, make some sort of first high here. And then this kind of effortless no result right over this one over here, this one over here. These two can be the opportunity on short on 1 minute time frame. But as I told you, your main focus should be 3 minute time frame, but you can have a 1 minute time frame open on a separate chart. Understand? Just to see if you can find a 1 minute opportunity. So if you take this opportunity, stop loss here, that would be a good trade. You catch that trade just right after 15 minutes. Okay. And then you catch the trade right after 15 minutes. Do you see?
Yeah.
Okay. And one more thing you can do here, you can see if you can find any structure. Okay. The price just breaks down, came back. And if you draw the structure of this one from here to here, this should be drawn from here, the major swing highs. Yes, it can be drawn. Fine. Okay. But it's too narrow channel. Okay. Now sometimes I see you draw these kind of channels. This is not the right channel. Okay.
Yeah.
It's
Okay.
very contracted. It's very contracted. I don't draw such kind of channel. The channel should have movements, like just one movement up, one more down, few candles. It should have a broad base. That's very important. So never draw a channel like this. Okay. Never draw. There is no channel here. I cannot draw any channel like this. Yeah, this one it can be a channel. This one can be a channel. This one here can be a channel. Okay. We have a broad base here. So yeah, this can be a channel here. Okay. Came down, the price just ranges here, and then make a breakdown final test of this climax and then fell down. Right? This could be a channel. So how to draw the channel? So do you understand your entry? Where would you enter here? Hello?
Yeah. Yeah.
Okay. Normally, once you have this kind of situation, when you have a big bar down, okay, the big bar down, there are two kind of situation here. Okay, let me explain you. So, okay, sometime what happens during London breakout? What could you do in such situation? For example, you have a range here, right? All right, and then you have a bar here that goes up and then closes down a little bit here. One straight bar and a huge bar. This bar forms an upthrust as well, and it closes below the. So this is FTI, and this bar has one action, one bullet action on FTI and this one. Okay. So what you can do, you can directly enter your trade right over here at this point. Sell trade. Place your stop loss always on the middle of this bar, as I told you, like a Fibonacci technique. Got it? Take fibs, okay? 50%. Take your SL right over here. Got it? And then let the market move down and take your profit 2R. Got it?
Yes.
Okay, for example, you have a range here. Well, what I want to explain to you, for example, you have a range here, this one, okay? This one, this is redistribution, let's suppose, or this is distribution, okay? Redistribution or distribution. And then you have this one here, okay? You have one straight bar up, let's suppose. Okay, this straight bar, it goes up. And then it also closes down. Okay. This kind of action. I think you have seen this situation before.
Yep.
right? So this one
Yes.
bar upthrust, this one bar which forms an upthrust as well and FTI as well, you can take your trade directly from here. Okay, you can take your trade at the close of this bar, and your stop loss, you take a Fibonacci tool and then place your stop loss right in the middle here, and then let the trade run 2R. Got it? You can do this right after London Open. Okay. This happened the last Friday when you lose. When you told me that you lose 4R that day. This kind of situation, but that was an upthrust bar. That was one spring bar. Okay.
Yeah.
Got it? Yeah. So you can take this kind of trade. Okay. All right. The second situation here is that you have this one here. Okay. You haven't. Now you have broken down. Okay. You have broken down here. You have a one straight bar here, and it closes below. Huge bar. What can be done with this bar here? What I suggest. Okay. Now what you do, you take a Fibonacci tool from here to here. Okay. This would be like here, 50 to 60%, right? And let the price came back and test this region, and then it will fall down. Sell over here. Got it? These are the two situations when you have a huge bar. For example, I explain you on the chart. We have this one here, right? Huge bar. Now what I'm gonna do, I'm gonna take a Fibonacci tool. Okay. Now this is the situation. I wait for the price to come back to this region and test it out. Okay. And test it out. But remember that the price should have two swings. Understand? It should not be just one bar test. It should have at least two swings, or at least a bearish action. For example, the price can have like this. For example, when the price is testing this region, okay, let's suppose the price went down and the price came back here, one swing, second swing, and then come down. Got it? One bar, two bar, at least two bars to the upside. Got it? Or the second thing is, if the price has one bar only and it rejects it, and then the second bar should be a down bar closure. And only this is the confirmation that it will go down. Got it?
It's like a top reversal.
Yeah, top reversal. Yes. But you need a confirmation that a bearish confirmation that the price will come down. For example, here, what do we see here? The price went up. What do we see? Effort versus no result bar, right? You will not take the trade directly. We need a bearish confirmation that this is confirmed. Okay. Then this another bar, huge bar, low spread bar. Okay. And then, okay, this is a kind of no demand. Again, confirmed. And then the price returned back, right? The price breakdown. Surge in volume. Can you see on the top? This is the point where you can take your trade. Stop loss just tight, very tight stop loss right above it. Got it?
Okay.
Okay. Now let's see here. If you extend this 50 and 60 to much more side, you will notice that this also rejects here. You can see. Right? The price rejects this high as well and this as well. Ultimately, right? Okay. The price comes down, rejects here. And then what do you need? This one bearish confirmation here. Yes. You can take this confirmation, take your stop loss here. This is first part, you can say. Bearish confirmation here. Okay. Yes. You can take this one as well. No demand. Confirmation. Put here. Because this technique, in this technique, if you're not testing the reference line, then you need a confirmation. What? If you're, let me repeat again, if you're not testing the reference line, and if you're using the Fibonacci tool, then you need a bearish confirmation. Got it?
Okay.
For at this point, we are just directly testing the reference line. So we don't need a bearish confirmation. Okay, we can just enter a trade stop loss here and then let the price go down. Okay. Here we are testing the reference line. We are testing the reference line. We don't need bearish confirmation. No, stop loss placement is very important. Now the price will, the price will range for a bit, but don't be scared. If you have stop loss over here, the price won't hit your stop loss. Do you understand? And if you have a right stop loss placement. For example, if you place your trade right over here, you might say, okay, this is a sudden increase in bar, and then you see the test bar, this kind of upthrust here, and then increase in volume. Yeah, and if you just take it, stop loss here. Now you see the price is ranging for a while around this area. Can you see how the price is ranging again and again, again and again? But as the stop loss is here, you don't have to be scared about it, and then let the price move to your target. Understand? This is the kind of patience, and this is the kind of technique which you need to develop in trading. It's very important. What was the next question? Let's go for the previous one. 23rd, right? 23rd is done. Need to go for 24.
22.
22. Okay. So the overnight session started at 3 a.m. your time. That's the highest point here. It's 2:45 here, this one. Okay. So obviously this is not a swing high, right? This was swing high. So overnight session starts from here. Okay. How about London session? Your London session starts from here. Okay. Right? London open. And then can you tell me the highest point here? Highest point between this and this one is here, right? This is not a swing high, right? This is swing high, but this is not a swing high. The major swing high was from here. Am I right?
Yep.
So you draw between this and this. And then the last one before what? I told you at 11 when the London price open, when the market closes. The market closes at 14 your time, the London session, right? So before this, the major swing point was this one, right? The major swing low. Draw the structure very clearly. Okay. Few simple points. Do you understand why did we do like this from here? Okay, let's see if we have a swing high. This is a swing high, you can see. This one is not clear. Which one do you use? The swing high and swing low? What's the name of the indicator?
Yeah. Wait. Give me 1 second. SHSLB02.
SHSL
LB02.
version 2. This one?
Yeah. Yeah, correct.
Okay. Swing high, swing low. Perfect. You can see the swing high. This swing high was before. So you can add this. Okay. This swing high and swing low should only be used for just for creating this one. Okay. Reference. And after that, you can hide it from here. Okay. So what do I see? Swing high, the next, but this swing high was before the overnight session starts. So we will not take it. Got it? This is the one. So this one is the highest one. This one is the lowest one. Right? Now we can hide it. Correct? Okay. Now we have the structure in place now. What structure do we have now? The first thing, as I told you, how the price is moving into the overnight range. Overnight session range. Can you tell me how the price is moving? What do you see here? The price came down and then the price just one huge move. Can you see on a 15-minute time frame?
Yeah.
One huge move to the upside, and then the price breaks down, and then so this one is what? This one is redistribution process, distribution, right?
How about the bearish bar on the left?
This one,
Yeah.
yes, this was reaccumulation. Here it was reaccumulation. Okay, on a 5-minute time frame, you can see the price reaccumulated, and then the price did move up, right? It achieved its target, and then it, what happened? Again, huge volume on the top side, and then the price reversed here, forming a top action, and then the price also did what? An upthrust here, forming an upthrust, and then break down, right?
Okay.
Okay, and now what happened? Here, this one here is what? At the top is buying climax, this situation. Okay, and here at the bottom is selling climax within this one bar. So what you're gonna do, you're gonna draw the straight bar here. Okay, this is selling climax here. All right, if this is selling climax here, so what do we have here? Buying climax here, but as you see here, how the price is moving here. So the price just came down. Okay, the price came down from here. Huge move to the downside here, right?
Yeah.
Okay, so this is what? Selling climax, right? And the price rose up here.
Yeah.
So this is a kind of buying climax, but more importantly, what happens is the price recovers back, tests this region, so this becomes AR, right? Because selling climax comes earlier than this one buying climax, right? So we will say that this is a selling climax, AR, right? And after AR move, what happens? The price came all the way down, and this one becomes what? Secondary test, right?
Yeah.
Right? So this is a broader range. Okay. So this one is what? This process is what? Whatever is forming here.
Accumulation.
Okay. If you want to further analyze here what's actually going on, you can see that the price is moving in a downtrend here, right? A huge downtrend here. Just join any two lows from here to here, and you will identify this one huge move was exactly a selling climax, right?
Yeah.
Selling climax, and of course after the selling climax, what this will become AR, right? Okay, now the price becomes secondary test here. Okay, now we will see what happens in a 5-minute time frame on a much more macro level. Okay, now tell me here, after the AR, how the price is moving. The price is moving downwards, okay, and then tested this region. Got it? So this is overnight low and that. Okay, now of course, now this process becomes what? As we know, accumulation base. So bias is equals to bullish. Correct? Any question here?
No.
Okay. Now, as I told you that we have a huge volume here as well, but like equal type of volume here. But we need to see how the price is moving here. The price is moving in a downtrend, and then we see a huge move down, and then a recovery point. So this becomes what? Selling climax, AR. Got it? And then you can draw this additional channel to confirm that this was a selling channel or selling climax. Okay. Now, here, yes, we do have a huge volume here, right? We do have a huge volume, and it is, I told you that this is AR, and it's also act as a buying climax for this region. Understand? What do I see buying climax of this region? Because this line, if you extend it forward, this will become the buying climax for the future market. Understand? See, I tell you. That's why I told you that this is actually AR of this selling climax, but it's also, this line is acting as actually the buying climax for the future market. Okay, this line, buying climax, and you will see, if you extend this line further, you will see how, what I mean to say. Okay, see how the price came back here near this region. Okay, if this is a secondary low here on a 5-minute time frame, it tested here, you can see, right? So this acted as a buying climax in what situation, during what time? During London, New York session, right?
Yeah.
During New York session, it acted as the buying climax, and you extend this channel here, and now everything is very clear, the whole structure. Okay. Now we go to the 5-minute time frame. So yeah, right now, since we are near what? We are near the selling climax region. We are near this overnight low. So this region is what? Can you tell me? This is overnight low. This becomes what? Accumulation, right? Okay. And now during this accumulation, okay, if you can draw any channel before this London Open, you can draw. All right. First swing high, second swing high here, forming from here. So basically, I cannot draw any kind of swing high channel here on this channel because there is no other swing high. This is the first swing high, Got it? Okay. So what happened? The price just came back and tested this region out. Okay. And huge spring on this overnight low. So this would be what? A good London Open trade, right? Any question here? A spring setup. A first setup here, a second setup here.